Hello, everyone. Welcome into your performance management class. I hope you all have a wonderful day. My name is Matlu Bilahi. I will be delivering, teaching, and leading this performance management course, your PM lecturer. So, little bit my introduction first of all. I have been teaching this course, performance management, for last more than 15 years. More than 15 years. Beside teaching performance management, my other two core areas are strategic business leader, that is SPL paper, and the advanced performance management, that is the higher level of this paper, performance management. So these are my core areas. Okay. Excuse me. This paper, performance management, is very close to my heart, and the passion, the energy uh, I have for this paper, definitely you will be experience that. Okay. And this is all little bit introduction. Now I would like you to share your thoughts about this paper. What do you think about performance management? Then I will explain it further about this paper. Okay, we will be going through the syllabus and other different areas that we are going to discuss today. So I would request each of you to introduce yourself about what do you think of this paper. Hello.
Hello, sir. Good evening.
Hi. Good evening.
Good evening. I'm Noreen from Mauritius, and my name, which appears on the screen, is Shay.
Okay. All right, Shay.
This is my third attempt. It's a very difficult paper for me. In
Okay.
fact, I'm not used to do costing and all. I prefer financial accounting.
So what is the biggest challenge you find in this paper?
The biggest challenge for me is the costing chapters,
Okay.
like throughput and ABC costing and all that.
All right. All right. So this is you find more challenging.
Yeah.
Okay, perfect. Thank you very much. And how about the other topics like decision making? That is the one of the biggest area, or standard costing, budgeting.
No, with this one I'm fine with it. Even the performance analysis and all.
Okay. All
Yeah,
right.
I need to clear this paper so that I can complete level 2.
Oh yes, yes. We will.
Yeah.
We will, we will be doing our best.
Yes, I've got this one and audit paper left.
All right. All right.
Yeah.
And thank you very much for sharing your thoughts.
Thank you, sir.
Next, I would request Kamuhilo. Hi, Kamuhilo.
Hi.
I hope I pronounced right.
Nah, it's good. The pronunciation is all right.
How you pronounce
It's Kamuhelo.
Kamuhelo? Okay, all right. Thank you.
Yes.
Perfect. So, would you please introduce yourself and your thoughts about this paper?
Well, my name is Kamuhelo Kamusiu. I'm from South Africa.
Wow. Okay.
Yes. And this will be my first time studying PM, that is the performance management.
Okay. So, what you have heard? What type of stories you have heard about this paper?
Well, I've heard that this is where we dive deeper into the management accounting somehow, because we still have the concept of relevant costing. Yeah, that's all I remember.
Okay.
But yeah, I still know that that is where we dive deeper into management accounting.
Yeah, no doubt that this is a very extensive syllabus, and a lot of learning out there, performance management. True. And how is the weather in South Africa?
Oh, it's very cold here. This is since it's winter, so it's
Which part of which province are you from?
parents.
Which one? Because I have been to Johannesburg, Cape Town, and then
Oh, well, I'm from Lesotho specifically.
Lesotho.
Yeah, Lesotho Maseru.
Mhm. All right, all right. So these days, sometimes there's a snowfall as well, I guess. I have heard
Yes, yes, indeed.
because all the mountainous areas, right?
Yes, sir.
Perfect. Okay, okay. Thank you very much.
Yeah.
Next, I would request Noor Jahan. Hi, Noor Jahan.
Hi, sir.
Hello.
So I am from Mauritius. It's the first time I'm taking this paper. I'm quite scared of it. I've heard that it's one of the toughest paper of level 2. So well, I'm just ready to dive in.
All right. You heard a little bit right. But with the planning, you can manage. That is, of course, there are thousands who pass this paper in every exam. So that means that is not something very difficult, although it's a challenging. And if you start planning, preparing, this is the right time instead of waiting. If you are going to write your exam in December, this is the right time to start preparing and planning. So of course, this paper will be, you will enjoy definitely this paper. Next, I would request Hamraz. Hi, Hamraz.
Hi, good evening.
Good evening.
I'm from Mauritius. I just completed my MBA and I wanted to complete the ACCA level.
Okay. All right. So, how many exemptions you got?
So I was doing ACCA Leon 2. So I have, let's say, 4 papers exemption.
Okay. All right. So, means you will be starting from performance management.
Yes, I'm starting from performance management. And
Oh,
I'm also doing the audit and assurance.
okay. All right. All right. Okay. So, thank you very much, everyone, for your wonderful introduction. For your knowledge, I also have been teaching in Mauritius as well. And you might have heard from 2013 till 19 for 6 years. So that was amazing experience. There are like thousands of students, and it was amazing experience teaching there. All right, so we are now going to discuss a little bit about, although this is not much tested at this paper, but it's important that you should know that performance management challenges which organizations are facing today. Although it's a more related to advanced performance management, that's the higher level paper of this performance management. If you read the business industry news, and you know about right now in 2025, the business and economy landscape is changing very fast. And there are many forces, there are many factors which are impacting organizations. And of course, when there is like any shift in the external environment, for example, when there's a change in political, like, or social or economy changes, or legal changes, or technology changes, or we talk about climate change is impacting the organizations all around the world. Of course, it impacts performance as well. For example, imagine if there are floods, if there are heavy rains, okay, how businesses would impact. Just imagine when there are floods, when there are rains, okay, it will impact the food, it will impact the crops. So the if there are droughts, if there's a scarcity of water, it will also hit agriculture. It will also impact the crop yields. So when crop yield is impacted, imagine there will be less output. And less output mean the crop prices will go up. And when crop prices will go up, food prices will go up as well. So all this is impacting performance management. Okay. Similarly, if there is a technology disruption, it will impact performance of the organization. For example, you might have heard about electric vehicles. You might have heard about Tesla or other electric vehicles. When there's a more and more demand for electric vehicles, there will be less demand or the falling demand for the conventional uh, engine cars. Okay, so there will be impact on the performance of Volkswagen. There will be impact on the performance of Ford, Toyota, Honda. The reason, because more people going to purchase electric vehicles. And this is happening everywhere around the globe as well. Okay, so the point is that performance management, when we talk about performance management, we should know that there are many factors that impact performance of the organization. So when we talk about performance, performance is not just about financial, it is about non-financial as well. Okay, financial, when we talk about financial performance, that is about impact on revenue, impact on cost, impact on profit, and other factors. For example, impact on cash flow, impact on the stock price, stock value, or share price. Okay. So if the company is a listed company, and etc. There are non-financial factors as well. And non-financial performance is now becoming critical. Non-financial performance management is becoming critical for the organizations. And there are many reasons for this as well. For example, you might have heard that companies are under pressure for their emissions. So companies are required by law, compliance, regulation, that they have to report their emissions, that they have to reduce their emissions. Emission mean their carbon footprints. Companies are under pressure to reduce their waste and report on their waste. Companies are under pressure to manage their performance on ESG areas. ESG stand for environmental, social, and governance performance. Now, at performance management level, there is discussion of ESG, there is discussion of sustainability. Yes. So you need to learn these areas, sustainability and ESG performance, because these are part of the performance management paper. But other broader areas still you would be, if you would be studying advanced performance management, will be discussed over there. So overall, that you need to learn here that there are emphasis on both financial and non-financial performance of the organization, and the fast moving, fast changing, the economic landscape, the global economy, all this is impacting performance. Another very interesting example, I can share it with you. These days, you might have heard about protectionist measures. These days, tariffs is a very hot and very interesting topic in debate. There are protectionist tactics or protectionist measures where different countries are protecting their local industries, their local companies, or you talk about the like other different type of tactics which are being used around the world to uh, like encourage local production, local consumption, local businesses. Okay, so all these are impacting the performance of the companies around the world. Okay, let's first of all have a quick look at the introduction of the syllabus of the performance management. So performance management syllabus is divided into 5 sections. There's section A is about the information system and data. Section B is about costing. Section C is about decision making. Section D is about standard costing and budgeting. And section E is about the uh, performance management. Okay, so let's quickly glance through each section and have an idea about what type of topics you can expect at each section. Section A is about information technology systems and organization performance. As you know that we are increasingly relying on technology. We are talking about technology, AI, cloud computing, machine learning, automation. All these are now buzzwords. All these are now the words that we come across every day many times. AI, when we go into social media, we are seeing AI generated content is there. When we are listening to the podcasts, when we are watching the news, reading the news, there is discussion about technology advancements. So when there is a technology advancements, of course, it is impacting accounting as well. It is impacting management accounting as well. It is impacting performance as well. Increasing use of technology is changing how we measure, manage, and report performance. Let me write this point for you that fast changing technology landscape is also changing the way we measure, we track, we report performance. And there is a very simple understanding. For example, you might have heard about automation, process automation. What is process automation? Like, for example, when we buy something, a product in the grocery store, and we scan that product, the barcode that is there. When barcode is scanned, okay, what happens? The process itself is performed. On the one side, we see on the screen in front of us that this product is sold, but on the background, the records of that inventory of that product is updated. For example, if we have purchased uh, like any grocery item. For example, if we have purchased a cereal or a biscuit, or we have bought cooking oil, for example. So the inventory of the cooking oil in the warehouse on the shelves will be updated all around throughout. For example, I give you example, one of the largest grocery store uh, in grocery chain or retail chain, that is ShopRite. ShopRite, by the way, has left Mauritius, but it is one of the leading grocery chain in Africa, one of the largest, ShopRite. So when we buy cooking oil or any other item from ShopRite, the inventory is updated throughout the ShopRite ERPS, Enterprise Resource Planning System. So its procurement team, its sourcing team can know that how many items of a particular cooking oil are left in the inventory. And they can even see the details of inventory of cooking oil of a particular brand at each location and each outlet, how many have been sold. So this is just one example, okay, how the processes and technology is transforming. This is just a simple example I have shared with you, okay. This is the rise of technology data. So using that all data about the cooking oil, they can find out that which location of ShopRite where more cooking oil of this brand is sold and where it is less sold. So using that data, they can identify why this particular brand is sold more and why it is sold less in a particular location. So accordingly, they can decide on their pricing, they can decide on their planning, they can decide on their decision making, and a lot of other actions they can do. Similarly, and another example like is Woolworth, for example. Woolworth is another store from South Africa, for example, or there are many South African companies like MTN. MTN, or MTN is a telecom company, but in Mauritius we have the MTEL, or Mauritius Telecom. So a telecom operator, let's say, telecom operator, they collect all the data about how many uh, like calls, how much internet is being used because they have the profiles of every user. Understand? So using that profile, they can identify which region, which services are being utilized, which region is using more data, okay, which region has more businesses, and all that. Using that data, they can plan, they can develop, they can offer new products, they can offer discounts, they can offer promotions, and they can develop new products, new services, and a lot. So the point is that you can think about, with just these 2 3 examples, I hope you have understood that how technology has become a crucial part of our lives and how it is transforming how businesses measure and report performance. I hope you understand this one. These are the topics that we will be covering in the performance management on section A. Managing information systems. Yes, there are different types of information systems that you need to learn about. For example, there is a transaction processing system, or there is management information system, or there is executive information system, or there is expert system. So these are the different type of information systems which are used at the different levels of the organization, and you need to learn about. Next is about use and control of information. Use and control, like how we use the information, and we need to make sure that our information is safe. We need to ensure security of data, and information. That's a very interesting. The more and more data we collect today, organizations are becoming more vulnerable to the hacking, the breach of data, because data breach is becoming a big problem, is becoming a big risk for business organizations or for organizations around the world. And companies are spending like hundreds of millions of dollars. Even this industry is booming. Billions of dollars are being spent on data security. Data security industry is growing massively. The reason, because companies are collecting more and more data, and they have to make sure that their data, their information systems, their information assets. Yes, another term that you need to learn now, this is called information assets. What are information assets? For example, very simple example of information asset I can give you, like the website of a business. Now, if an e-commerce company, let's say, same example I can give, for example, a hotel, let's say Hyatt or Hilton Hotel, for example. Now, Hilton Hotel, we book through Hilton Hotel website, let's say, or Marriott, for example. What if the website is down or website is hacked? What would happen? Imagine. Means the uh, guests may not be able to access the website, and this may cause big loss or big impact on the performance of the hotel industry. Understand? Similarly, other information assets are app. For example, these days, increasingly we are using app to uh, like collect data. We are using app for e-commerce. Understand? So what if the app is breached, for example, or app is not working, or the app is down? This will also impact the performance of the organization. Similarly, you can talk about ERPS, Enterprise Resource Planning System, is an other information asset for the organization, and a lot of other different algorithms, different information assets. So the point is that increasingly we are collecting data. The organizations are becoming more and more vulnerable to the hackers, hacking attacks, system breaches, security breaches, data breaches. So that's why we need to make sure that there are right controls in place to protect the data and information assets. Next area is about big data and data analytics. This area is focusing more on big data, and data analytics is focusing on what is big data. What is big data? You might have heard about the big data. Big data is term is now used in the context of the 4 V's. 4 V's mean that the big data has the massive volume, the massive velocity, the speed at which the data is generated, uh, volume, velocity, variety, veracity. Volume is about the massive amounts of the data generated every second. Think about the social media companies, think about the credit card companies, think about the telecom companies, think about the grocery chains, how much data they collect every moment, every hour, every second, every minute. Okay, so that's the volume. Velocity is the speed at which the data is generated. So that is 4V I am talking about. Volume, velocity. Number 3 is a variety. Variety is about the different types of the data which is collected. For example, the data can be in the form of speech, in the form of words, in the form of images, in the form of emotions, in the form of videos. So there are different varieties of the data is captured, and that is then analyzed. Okay. The fourth V is called veracity. Veracity means that not all the data available is useful. Not all the data available online is accurate. And that is true. For example, we can talk about reviews. Do you think the reviews, online reviews on different websites or Google reviews even, do you make decisions using these reviews? Do you use these reviews for your decisions? For example, you are going for a restaurant, yeah, and before going into the restaurant, before reserving the restaurant, you want to go through the reviews, and when you find the reviews, all reviews are just wow, amazing. They are fabulous, fabulous. But when actually you visit that hotel or that restaurant, your experience has not been good. You might be disappointed. So when you go to look at the reviews, reviews say it's amazing. So it's possible that reviews might have been fake, fake reviews. And this indicates the problem of fake data, fabricated data. We have heard about disinformation, misinformation, fake news. All these are the issues. So that's why we need to be very careful when we find any data. Even these days, you might have noticed now the AI generated content is flooded. Internet, social media, flooded with AI generated content, and it is becoming increasingly difficult to separate what is truth and what is fake and what is false, what is true and what is not true, what is actual, what is human experience, and what is AI generated. So, my dear, these are all the rising challenges. Of course, now you may ask that, are this impacting performance? Yes. All these has link with impact on performance of the organizations. Okay, so very interesting, this area for you to learn and prepare. Now let's talk about section B, specialist cost and management accounting techniques. Specialist cost and management accounting techniques, the syllabus then introduces more specialized costing and management accounting topics. There is some knowledge assumed from management accounting, primarily overhead treatments. The objective here is to ensure candidates have a broader background in management accounting techniques. So what are the cost and management accounting techniques we are going to learn in performance management? We are going to learn about activity-based costing. What is activity-based costing? Unlike conventional costing, where overheads are absorbed into the cost of the products using a rate, overhead absorption rate is calculated and then overheads are absorbed. But there are problems with the conventional overhead absorption, because conventional overhead absorption assume that the similar resources are being used by, or it assumes that volume-based overheads absorption means the more volume of a product mean more overheads are absorbed, but that may not be accurate. A product that is in lower volume might be absorbing more overheads. And yes, the overheads in nature has changed. The overheads that we were incurred in the last century were different, and the overheads in modern era in 21st century nature of overheads have changed. So that's why we need to use a new system, a new method of absorbing overheads into the cost of the product. And here is activity-based costing. Next is called target costing. Under target costing, we calculate the product cost in a different way. Okay, here, unlike conventional method, where we first calculate cost, then add the profit to calculate price of the product. But under target costing, we follow opposite, another way. So we start from the price and then deduct the profit to arrive at target cost. So target costing, we deal with the cost in a different way. Next is life cycle costing. Life cycle costing offers a more deeper and broader and comprehensive view of our product cost. So here, rather having a period cost, focus on period cost. This method offers the opportunity to have long-term focus. Life cycle costing offers a more comprehensive view of product cost. And what is that comprehensive view? That comprehensive view mean life cycle cost. Mean we calculate the whole life cycle cost of our product rather than a short period cost. Very interesting. Number 4 is throughput accounting. Throughput accounting is another amazing method of costing that deals with how to manage under constrained resources. How to manage under constraint resource. This term, this word, now we will be regularly discussing at performance management. So you need to be very clear what is a constraint resource. Constraint resource can be also called a bottleneck resource. Bottleneck resource. So constraint resource or bottleneck resource is any resource that is in short supply. That is in short supply means it is not available in abundance. It's available in limited supplies, also called limited factor, also called as limiting resource or limiting factor. Okay, so you need to know that what is a limiting factor, limiting resource, also called constraint resource or bottleneck resource. These are the different terms we use. The meaning is same, but the point is you need to learn how to manage under constraint resources. Topic number 5 is about accounting for environmental and sustainability factors. As I mentioned earlier, that sustainability is now part of the performance management, although it is not very comprehensive, but simple. You will learn here the different types of environmental costs, and methods of management, how to manage performance under environmental costing. Methods of performance management. So this is section B, specialist cost and management accounting techniques. I hope you have understood this. Very interesting, where you will have the opportunity to learn about the different costing methods. Section C, decision-making techniques. One of the lengthiest area. It's a quite broad area where you will be learning the different decision-making techniques. First, let's quickly go through. The syllabus then considers decision-making. Candidates need to appreciate the problems surrounding scarce resources, pricing, and make or buy decisions, and how this relate to the assessment of performance. Risk and uncertainty are a factor of real-life decisions, and candidates need to understand risk and be able to apply some basic methods to help resolve risk inherent in decision making. Okay, so what different topics we will be learning here? There are 6 different topics we will be learning here under decision making techniques. First of all, relevant costing. Relevant costing, you will be learning here about what are relevant cost, how to calculate relevant cost of material, how to calculate relevant cost of labor. Keep in mind that all these methods are used for short-term decisions, decision-making techniques for short-term decisions. These are not for long-term decisions, because long-term decision techniques are discussed mostly at FM level, financial management. Over there, we are making decisions about debt, about equity, about like financing, about dividends, about all that investment decisions. Those are long-term decisions. These are more short-term decisions. These are more operational decisions. So relevant cost analysis. Number 2, cost volume profit analysis, also called CVP analysis. CVP analysis, cost volume profit analysis, focuses on the interaction of cost, volume of the production and sale, and profitability. Okay, it's also called break-even analysis. So break-even point or break-even analysis, here we will be discussing about how to calculate break-even point. What is a break-even point? How to calculate break-even point in terms of units, in terms of revenue, for single product and for multiple products. Okay, so all that is part of cost, volume, profit analysis. By the way, CVP analysis also explores how the changes in cost and volume of activity impact profit. And yes, there are questions on this topic too. So you should be clear how changes in cost and volume of activity impact profit. Very simple example, I can share it with you. Simple example about this. For example, it says that example, what if there is 10% increase in material cost? So if there is 10% increase in material cost, how it is going to impact the profit? Or what if 10% decrease in volume of output? volume of production. So how this may impact profit of the organization. So these are the different ways in which you can expect these topics could be tested. Okay. Next is number 3, limiting factors. Limiting factors, little bit we already discussed under throughput accounting, but here you will be learning more deeper how to manage performance with single limiting factor and with multiple limiting factor. If there is a single limiting factor, what method we have, and when there is a multiple limiting factor, what method we have. Single and multiple limiting factors, LF limiting factors. When there is single limiting factor, which method we have? When there are multiple limiting factors, which method we have to manage the performance? Number 4 topic is about pricing decisions. How to set price of a product. The different methods we will learn here about setting pricing methods to set price. Number 5 topic is make or buy and other short-term decisions. Here, you will learn about how to make a decision about whether we should make a product in-house or buy it from outside suppliers. Okay, so this type of decisions and other short-term decisions. Other short-term decisions are about like continue or discontinue decisions. Continue or discontinue mean, for example, if a company is making these pen, for example, and now it is considering the decision whether it should continue the making of this pen or discontinue making of this pen. So how this decision may impact performance of the organization. As I mentioned, that decision-making techniques for short-term and impact on performance. So every decision that we make would have impact on performance of the organization in terms of revenue change, in terms of cost change, in terms of profit change. Okay. Topic number 6 is about dealing with risk and uncertainty in decision making. Very interesting. Risk and uncertainty. Do you know every decision would have certain risk and uncertainty? Some decisions might be high risky, some decisions might be low risky. So here you will be learning about how to make a decision under high risk or low risk situations. Very interesting. And by the way, every decision has a risk and return. Next, section D, budgeting and control. What you would be learning. Let's quick look at the summary of this budgeting. Budgeting is an important aspect of many accountants' lives. Yes, of course. The syllabus explores different budgeting techniques, including analytical techniques and the problems of inherent in them. The behavioral aspects of budgeting are important for accountants to understand, and the syllabus includes consideration of the way individuals react to budget. Yes, that is about behaviors. That is about behaviors, like how people react to different budgeting systems. For example, if a business is using one budget system and now it wants to change to a new budgeting system, so how people would react. The preparation of fixed, flexible, and incremental budget is assumed knowledge from management accounting. Yes. Standard costing and variances are then built on all the variances examined in management accounting are assumed knowledge in performance management. Yes, many variances that you might have studied at your MA level paper For example, material variances, labor variances, overhead variances, are assumed that you know about those variances already. So mix and yield variances, yes. So at performance management, we will be discussing more about advanced variances. What are advanced variances? These are mix and yield and planning and operational variances. These are considered as advanced variances. Mix and yield, planning and operational variances will be explored at performance management. It's important for accountants to be able to interpret the numbers that they calculate and discuss what they mean in the context of performance. This is one of the challenging area for performance management students, interpretation of variances. You need to learn as a part of your this preparation how to interpret, because interpretation of performance is challenging. Impact on performance. A lot of students, PM students, find it challenging. Okay, my dear, but I hope you will prepare, you will learn, and this is the time that when we have to discuss all this. Okay, how to interpret the impact, how to look at the broader picture. Broader picture. What is called broader picture? Mean more comprehensive view of performance. Comprehensive view of performance. So this is the skill that you need to develop and learn. This is a skill to learn for you. Okay, so the topics that we are going to cover under this are budgeting system and types of budgets. We will be learning here about the different types of budget, for example, incremental budgeting or rolling budgeting, zero-based budgeting, flexible budgeting, activity-based budgeting. These are the different budgeting methods we will learn here. Analytical techniques in budgeting and forecasting. You will learn here the forecasting techniques and analytical techniques, for example, high-low method, for example, learning curve adjustments, time series analysis, and the the other forecasting techniques, linear regression analysis. Number 3 is about standard costing, about the different type of standards which are used in the budgeting and forecasting. We will learn here how to set standards, what are standard cost. Number 4 is material mix and yield variances. Material mix and yield variances are the different types of variances which are calculated when multiple materials are used by a business in making a product. Multiple materials. If a single material is used in the making of a product, then no need for calculation of material mix and yield. But when multiple materials are used, then we need to have more comprehensive view, more detailed analysis. These offer detailed and comprehensive view of performance. Next, there are sale mix and quantity variance. Sale mix and quantity variance, just like as material mix and yield variances, sales mix are calculated where a business is selling more than one product. If the business is selling just a single product, then there is no need to calculate and measure sale mix. But when there are multiple products are sold, then sale mix and quantity variance need to be calculated. Next are very interesting variances, planning and operational variances. Planning and operational variances. Every variance is supposed to have two components, every variance, and these two components are called as planning and operational variances. Basically, planning and operational components focus on what part of a variance was controllable by management and what part of the variance was not within the control of the management. So management would not be in position to influence that part of the variance. Understand? And this is measured under planning and operational variances. I mean, planning is the part of a variance which are or which would not be controlled by the manager, and operational part of the variance is the where a manager can control. So we will be discussing all this in detail during our this chapter discussion. Next part is about performance analysis. Here we will be discussing about the different other topics, other areas on variance analysis. For example, if a business is using like just-in-time, JIT, or TQM, total quality management. So if a business is using these techniques, just-in-time and total quality management, so are variances still good choice or not? We will be discussing all this here. Last part is about section E, performance measurement and control. So the summary of this section is syllabus concludes with performance measurement and control. This is a major area of the syllabus. Accountants should appreciate the importance of both financial and non-financial performance measures and management, and should also appreciate the difficulties in assessing performance. Difficulties. What are the difficulties in assessing performance? Difficulties normally we face when it comes to qualitative performance. Qualitative performance. Yes. Quantitative performance is easy to measure. What is quantitative? Quantitative is more about numbers, digits. Quantitative is more about financial or other numbers when that we can measure. For example, quantitative, we can measure that how many units of a product are sold. In quantitative, we can measure that how much revenue has been generated. But how we can measure whether our staff is motivated or not? Staff motivation, staff morale, whether our staff morale is high or low, customer satisfaction, whether our customers are satisfied or not, productivity, whether our processes are productive or not. So these are the different qualitative areas of performance, and these are not straightforward because these would be more deeper. These would be complicated, complex areas, and they highlight more deeper issues with performance. For example, like customer complaints. Customer complaints are increasing. Customer complaints. This is not good for the business long-term future if customers are complaining, because if customers are complaining, customers may ultimately switch to other suppliers. They may stop purchasing from our business, and that would be loss for us. So we must have to address these customer complaints. Now, why are those complainings? So we need to find out reason. And reason requires more deeper understanding. Okay? Reason requires more deeper analysis of why are customer complaining? Are there problems related to our products, production? Are there problems related to the quality? Are there problems related to our staff behavior? Where are the problems? Where are the problems? So reason, when we start finding reason, this would offer more comprehensive, more detailed, more in-depth view of performance. Where is the problem? Where is the problem? Very interesting. So, do you think measuring all this is simple, is easy? No, my dear. This is not simple area to measure. That's a complicated. The reason is that, because it requires a broader picture. Those customer complaints may not be within the control of the business. Yes, it's possible. Those customer complaints might be because of other factors. Okay, so this is, the problem is subjective nature. The reason is because these qualitative factors based on opinions, people, personal experience, and that is based on people, personal judgment, personal opinion, and that's a more subjective because it's based on emotions, based on personal experience and emotion. So it may vary from person to person. That's very interesting. Okay. All right. So these are the three areas which are part of the performance management, measurement, and control. Number one, performance analysis in private sector, public sector, and not-for-profit organizations. Performance analysis in private sector. Yes, this is for-profit sector. Public sector and not-for-profit organization. Yes, there are different methods which we use for profit and not-for-profit. Then the next topic is divisional performance and transfer pricing. So you will be learning here about the different measures of divisional performance. What is a divisional performance? Where a business has different divisions, and every division performance need to be measured separately. Next, specific performance analysis issues in not-for-profit organization and the public sector. So we will be learning here about the specific issues. Specific issues mean like the not-for-profit organization would have large number of stakeholders, and because every stakeholder might have different expectations, so this may not be possible for the organization to meet all those expectations. And similar other problems that we will be discussing here under this section. So, my dear, this is about the quick introduction of syllabus. Is there any question? Is there any question? If there's any question, you feel free and ask me, okay? Don't be shy. This is your class. And whenever there is something you got question or you are not clear or you want more details on any particular topic, you want more discussion, you want me to revise, repeat, please feel free. This is your class, okay? So let me know. Let's, after this syllabus discussion that we have comprehensively discussed, now we can discuss the section F. Section F is more about employability and technology skills. Basically, this is about your computer-based exam. You know, you will be having your exam using the computer and software. So you should know how to perform the basic functions in this computer-based exam. Okay, so this is more related to employability and technology skills. For example, use computer technology to efficiently access and manipulate relevant information. Yes, we should be able to log in. We should be able to open all those question windows. Okay, we should be able to navigate within the website, navigate through the different questions, okay, and use that information for our answers. Work on relevant response options using available functions and technology as would be required in the workplace. Yes, like as for example, if you have to make calculations, so there are spreadsheets, and how you make use of those spreadsheets, use basic formulas. For example, if you are calculating, you can use sum, minus, or multiplication, division, average, these type of simple formulas that you can use in the spreadsheet. Or if you have to write and discuss, so you are using other like word process, okay, processor, that sheet you are using in writing your answer, you can type. All this is part of your employability and technology skill. Okay, further, you should be able to use the data, present the data, and interpret the data that is given in the questions. For example, variance analysis, let's say. For example, variance interpretation. So you should be able to interpret those variances and type your answer. So all this is part of employability and technology skill that of course is now assumed knowledge. Okay, and by the way, from this section E of the syllabus, one question of section C of the paper will be tested. Out of these topics, one question of 20 marks of section C will be examined. We will discuss this in more detail here. All of the subject areas covered in this syllabus could be examined in either a public or private sector organization. Okay, so approach to examining the syllabus. First of all, let's look at the exam format. Performance management exam format. The exam format will comprise 3 exam sections. Section A, Section B, Section C. So section A is more based on objective test questions. There would be different type of objective test questions will be tested. There would be multiple options, MCQs, or there could be fill in the blanks, or there would be drag and drop. There would be different type of OT, like objective test question. We will discuss it after this discussion. I will show you the different type of OT, objective test questions. So in section A, there will be objective test questions. How many questions? 15 questions at 2 marks each. So the total marks for section A will be 30 marks. Section B is objective test case question. What is this? You will be given a scenario, a long scenario, and from each scenario, there will be 5 questions. In other words, there will be 3 scenario questions. There will be 3 case objective test case scenario questions, understand, and 10 marks for each. In other words, every question will have the 5 sub questions. So if there are 3 OT case questions and every question will have the 5 questions, so there will be total 15 questions. Okay, 3 multiplied by 5 is equal to 15 OTQs. Okay, and every OTQs will have 2 marks, so total will be 30. So this is 30. I hope you understand. Section B, 3 long case questions. Out of each long case question, there will be 5 OTQs or objective test questions. Okay, 2 marks each, so total will be 30 marks. I hope you understand this. Section C is about constructed response questions. These are the long questions, and there will be 2 constructed response questions, and each with 20 marks. Okay, 2 questions at the rate of 20 marks, so total marks are 40. And overall aggregate is 100. All right, the total marks will be 100 and you have to get 50 marks to pass. Got it? This is exam format. If we look at the exam format in more detail, Section A and Section B will be selected from the entire syllabus. Yes, Section A and Section B would be topics would be selected from the entire syllabus, means all sections of the syllabus. The responses to each question or subpart in the case of OT cases are marked automatically as either correct or incorrect by a computer. Yes, because these are already programmed answers in Section A and Section B. So these are automatically marked by the computer. Section C questions will mainly focus on following syllabus areas, because Section C is more related to constructed response. Constructed response means you have to develop your own answer in your own way, with typing, with writing, with calculation. You have to develop your answer. Okay, so Section C questions will mainly focus on the following areas. So Section C will focus on the 3 areas of the syllabus. It will focus on decision-making techniques, focus on budgeting and control, and performance measurement and control. As I mentioned already, that one question will be tested from Section E. One question at the rate of 20 marks will be tested from Section E, And one question, either this or this, one question will be tested from section C or section D of the syllabus. It can be either decision-making techniques, or it can be either budgeting and control area. It can be any of these two. Okay, but one question will be coming from section E of the syllabus. However, these questions may also include requirements related to the information system area of the syllabus. Yes, so these questions may test indirectly or directly section A, information system of the syllabus. The response to section C questions are human marked. Yes, because every answer may vary from each student to each student. So that's why these are human marked answers. My dear, this is about exam format. Are you okay? Are you clear? Are you clear? Or if there is any question, please respond. Is there any question?
No, sir.
Very good, thank you. Kamu, hello.
No questions, sir.
You have understood everything?
Yes, sir.
Perfect. Thank you, and thank you, Nurjahan and Shamshunisa. Thank you. All right. Now let's talk about the study resources. So basically, there are two types of resources. One is about technical side. This is about the knowledge side, knowledge, topics side. So I will be providing you the study text, okay? And study hub, this is the ACCA study hub. That is, you will have the opportunity to uh, like learn from study hub resources as well related to different topics. I hope you already have gone through. If you have not gone through, I would suggest you, I would advise you to log in into your my ACCA and go through the performance management study hub area, ACCA study hub. You will find over there many articles, short notes, and many other helpful material. So study text I will provide, and the study hub is from ACCA study hub. The second part is about practice. This is about knowledge. The second thing is about practice. So in practice, there are three sources. Practice kit that I will provide you, okay? And then study hub, the same ACCA study hub, and then ACCA practice platform. So these are the three areas or the resources that you will be using for practice. Kit, study hub, where there are like practice questions are available, and the practice platform, there are further practice questions are available. Okay, so this is about the study resources, text plus practice. Important dates to know. We are starting today and we will be ending on Saturday, 1st November. My dear, this time will pass very fast, means almost 4 months, like July, August, September, and October, almost 4 months. And these 4 months will pass very quickly. So you need to be on top of the game from day one. Mark your calendar with important dates, with your planning. Prepare, plan, and measure your progress every week. How many weeks are there? There are, if say 4 months, let's say, so there are 16 weeks are there. You can divide into 16 weeks, and every week, at the end of every week, you need to track, you need to measure your performance, how much you have prepared. That is very important. You don't have the time to waste, and you don't have the time to wait. Please don't wait. Start it today itself. Now, when you are clear that you are going to prepare and take exam, and by the way, performance management syllabus is extensive. It's a very vast. There are so many things that you need to learn. So considering this is the best time that you can start working on learning and preparing for your performance management exam. Okay, that's it from our discussion on introduction and syllabus discussion. Now we need to take a short break, and after break, we will be going through refreshing basic management accounting concepts, where we will be discuss a quick concept of absorption marginal costing, how overheads are absorbed and calculated with the help of few examples, and then we will discuss introduction of activity-based costing as well. So all this is coming after the break time. 10 minutes of break time is there. So use this time, and after 10 minutes, we'll be starting the revision of basic management accounting concepts. Okay, see you after 10 minutes. Okay, so first of all, we are going to have a quick revision and understanding of the basic costing methods, absorption costing and margin costing. What is absorption costing and what is margin costing? What is the difference between these two? Absorption costing is a form of costing in which cost of products are calculated by adding an amount of indirect cost. Yes. First, we calculate direct cost, and direct cost includes direct material, direct labor, and any other direct expenses. Okay, if there are any. So these are called direct cost. You need to be clear on direct cost. When we sum all this is called direct cost of production, direct material, direct labor, and any direct cost. When these are added, this is called direct cost of production. Now, under marginal costing, we consider this cost and add any marginal or variable overheads. But under marginal costing, we don't absorb fixed overheads. You may be already know about this, that under marginal costing, fixed overheads are not absorbed into the cost of the product. But under absorption costing, we need to absorb overheads into the cost of the product. And here are these absorbed overheads. So once direct cost is calculated, we need to absorb overheads. Now, how are these absorbed? How to absorb these overheads? My dear, you need to know about this. The reason, because in many topics of performance management, you will need this. Whether the topic is pricing decisions, whether the topic is standard costing, whether the topic is budgeting, you may need to use this method. So please focus and make sure you learn it clearly. Direct cost plus absorb overheads is equal to full production cost. Now the question is how to calculate this or how these overheads are absorbed. We are going to discuss it now here. How to calculate overhead absorption rate. So in order to absorb overheads, we need to first calculate overhead rate. Okay. In order to absorb overheads into the cost of a product, first we need to calculate OAR. What is OAR? Overhead absorption rate. We need to calculate overhead absorption rate. Okay. Now, how to calculate overhead absorption rate? I hope you already know about this formula. If you have any confusion, make sure you clear it. The reason, as I mentioned, you will need this to apply in many different topics of performance management, whether it is about CVP analysis, it's about pricing, it's about limiting factor, make or buy decision. Many topics may test this knowledge. Let's discuss this. How to calculate overhead absorption rate. The overhead absorption rate or rate is determined in advance for the financial year when the standard costing is used. Yes, it is used in standard costing. It is calculated in one of the following ways. So simple formula, total budgeted fixed overheads expenditure, total budgeted production overhead expenditure or total budgeted fixed overheads or total budgeted fixed overheads divided by total budgeted activity, total budgeted activity. That is the simple formula. Total budgeted overheads divided by total budgeted activity. Okay, so in this way, we can calculate the overhead absorption rate, OAR. Now, this budgeted activity, it can be number of units, it can be machine hours, or it can be labor hours. Okay, it can be number of units, it can be machine hours, it can be labor hours. On this basis, we need to calculate the overhead rate. Once overhead rate is calculated, once OAR is calculated, next step would be to absorb overheads into the cost of product. Okay, now you have got the basic understanding, and we can apply this on this example. This example will help you how to tackle this overhead method. Okay, simple example, but I'm sure you are going to learn the whole process. A manufacturing company makes two products, X and Y, two products, X and Y. Budget information about these products is as follow. Okay, so what are the budget information? There is product X, there is product Y. It particular are given direct cost per unit. Direct cost. What is direct cost? Do you know? We have discussed already direct cost. This is direct cost. Direct cost of production is this sum of direct material, direct labor, and direct expenses, if any. Okay, so this is the direct cost per unit, direct material, direct labor, and any direct expenses. So this already is calculated, that's 10 and 7. Direct labor time to make each unit. Direct labor time, this is labor time, 15 minutes for product X and 20 minutes for product Y. 15 minutes for product X and 20 minutes for product Y. This is the labor time per unit. Budgeted production for the year. So budgeted production for the year for product X is 8,000 units, and for product Y that is 9,000 units. Okay, this is data. This is information given to us. That this is information about direct cost, about labor time per unit, and about budgeted production. Further information is here. The budgeted production overhead for the year. The budgeted production overhead for the year are 120,000. Keep in mind, this is 120,000 for the year, and these are budgeted production overheads for the year 120,000. The company uses an absorption costing system and a direct labor hour absorption rate. So now you are clearly told that the company uses absorption system and it calculates the rate on the basis of direct labor hour required. What is the absorption rate for overheads and what is the budgeted cost per unit of product X and Y? So there are two requirements in this question. The two requirements are, the requirement number one is absorption rate. We have to calculate absorption rate, and using this absorption rate, we have to calculate the budgeted cost per unit of product X and Y. So there are two requirements that we are going to work on in this question. By the way, if I ask you, why not try this example just to have a check on your knowledge? Would you try this in 3 minutes? Would you try this in 3 minutes?
Yes, sir.
Yes, sir.
Very well done. Very well done. Great. 4 minutes you can take. 1 additional minute. So 4 minutes you have. Refresh your knowledge quick. Okay. Have anyone completed?
For product X, I got the OAR as 60 $60 per hour, since the OER is absorbed on the basis of direct hours.
Okay.
And then for product Y, the OER was $40 per hour. Yeah, according to me.
Good, good, good. Let's try. Very good. I really appreciate your effort. Very good. And how about other students? Have you completed? Okay, so let me solve it now. So if you already have done your answer, you can check. First of all, we need to calculate overhead absorption rate, and overhead absorption rate is a single rate for all products. Okay, OAR. First, we are calculating OAR, and OAR is a common single rate for both products. How to calculate OAR? Formula is OAR equal to total budgeted overheads divided by total budgeted activity. Total budgeted overheads. Are the total budgeted overheads given? Total for the year. For the year. These are given. Yes? How much are these? 120,000. Do you think the total budgeted activity is given? Total budgeted activity, is it given? No, this is not given. Need to be calculated. This is available. This needs to be calculated. And this is a tricky thing, and many students find it challenging, but I hope my students will find it very easy. This is not available, need to be calculated. Use available data. Use available data to calculate this total budgeted activity. What is total budgeted activity? Is total budgeted labor hours. Total budgeted labor hours need to be calculated. So how are we going to calculate? Product X. First product X. Its number of units are 8,000 units. Please focus and make sure you understand this method. 8,000 units, 8,000 units multiplied by each unit requires how many hours? Each unit requires 15 minutes. So 8,000 units multiplied by 15 minutes, and because these are minutes, we can divide by 60 to convert it into hours. Similarly, for product Y, its budgeted production is 9,000 units. 9,000 units. Each unit of product Y requires 20 minutes of time. So 9,000 multiplied by 20 minutes and divided by 60 minutes. So we can convert it into hours. Yes, please. How many hours are required for product X and how many hours are required for product Y? Can you please quickly calculate? 8,000 multiplied by 15 divided by 60. Yes. These are 2,000. Very good. 2,000 hours. And for product Y, how many hours are these? Quick, please, quick.
3,000.
These are 3,000 hours. And total hours? How many are total hours? Total
5,000.
labor hours are 5,000. Okay, this is a tricky calculation, and performance management exam love this type of calculation. You can expect this type of calculation in your exam. I hope you understand this. 5,000. Now this 5,000 is done, so we can use this here 5,000. Total budgeted overheads divided by total budgeted activity, that is 5,000. Now you can calculate rate. How much is rate? 120,000 divided by 5,000 hours. Make sure you understand the whole approach, the whole concept, the whole method is clear to you. That is one of the key learning for today, by the way. Yes, please. Quick, my dear, quick.
24.
How much?
24.
24? Okay. $24 per hour. Thank you. $24 per hour. Very well done. So this is done, and now we can use this in the absorption of overheads. Okay, so product X and product Y. Here we can give heading calculation of product cost. Product X is here and product Y is here. Okay, so what is direct cost? Direct cost per unit is here. X direct cost 10, Y 7. 10 and 7. Okay, and there is no other cost. We need to absorb overheads. So how much overheads are we going to absorb into X? The rate of per hour is 24. Should we absorb this 24, or we need to adjust according to the time it consumes? This is a good question I'm asking you. Should we absorb this 24 as it is, or we need to adjust it according to its time, that is 15 minutes?
We need to adjust it.
Yes, we need to adjust. We cannot absorb 24 because 24 is per hour, but it requires 15 minutes. So we have to adjust. I hope everyone is clear. Kamu, hello. Are you okay? For product X, 24 multiplied by 15 divided by 60. And for product Y, 24 multiplied by 20 minutes divided by 60. Yes, please. So how much overheads to absorb in product X and how much overheads to absorb in product Y? Quick, please, quick.
6 and 8.
Very good. So $6 of overheads absorbed into product X. Why? Because it consumed 15 minutes. 15 mean 1/4 hour. 15 minutes are mean quarter of hour. So quarter of hour mean quarter of rate, that is $6. And for how much? Why? 8. Yes. So because it consumed 1/3 of the time, so $8. And now you can calculate budgeted product cost per unit. Budgeted product cost per unit is 10 plus 6 is equal to 16 and 7 plus 8 is equal to 15. This is the way how we deal with traditional overhead absorption rate and how overheads are absorbed into the cost of a product. Okay, so in this question, you were having the opportunity to learn the two important concepts in the traditional absorption costing: how to calculate OAR with multiple further calculation, and how to absorb this overheads into the cost of product. Is everyone clear? This important concept, important learning. Very good. Perfect. Okay, so this was a kind of revision of your knowledge on overheads. And by the way, as I mentioned earlier, this method and these calculations you can expect in many performance management topics. So please make sure you are clear on all this. Okay. If there is a question, you can feel free and ask. I am moving on to our next discussion. There are many problems in this traditional absorption method or dealing with the overheads. Traditional overheads absorption method has various problems. What are those problems with this traditional overhead absorption method? It assumes that either there is a labor hours base is used, or it assumes that overheads are driven by either labor hours or machine hours, which is not accurate. In 21st century, the nature of production, the nature of operations, the nature of manufacturing, the nature of services has dramatically changed. In last century, or if we go back 40, 50 years back, it was accurate because 50 years back, manufacturing was simple. But today, manufacturing is very complicated. So its assumption number one was simple operations. Simple operations mean mostly like 50 years back, or 40 or even 30 years back. You can, like 1990s, or even 25 years back. Simple operations mean simple manufacturing was used to be. Okay, simple manufacturing. Number two, its assumption was that overheads are driven by either labor hours or machine hours. The reason why? Because machine or labor was predominant in the production. Number three, its assumption was simple products. Their products are just simple. Number four, its assumption was that simple products, simple operations, simple supply chains, and little or few service overheads. Services or service overheads. Now come to 2025. In 21st century, all these assumptions have changed. All these assumptions have changed. Now there are more complicated operations. Now there are more complex products. Now there are more service overheads and less production overheads. And there are different activities and drivers which are driving the overheads. These are not just labor hours or machine hours, or even the role of the labor in today's manufacturing have dramatically decreased. Yes, because today, if you look at the production lines, if you look at the production lines are automated. Production lines are complex today and automated. These are technology driven. There's a lot of technology used in today's manufacturing. Technology has become a critical component of modern day businesses. And there are a lot of other details I can discuss. That means that this conventional method of overhead is no longer suitable for modern day organizations. I hope you have understood this basic discussion. That means we need another method. We need new method to deal with overheads. The reason, because as nature of overheads have changed, we need new methods. Here is activity-based costing, introduction to activity-based costing. Activity-based costing is a form of absorption costing. Yes, it's a kind of absorption costing. However, it differs from traditional absorption costing because it takes different approach to the apportionment and absorption of production overhead. Yes, it is, you can say it is advanced type of absorption costing, but it differs widely from traditional absorption costing. How? Under traditional absorption costing, we just calculate single rate to absorb overheads. It differs from traditional. How it differs from traditional? Because under traditional, a single OAR is calculated and used, whereas under activity-based costing, we use multiple activities and multiple rates for calculation, apportionment, and absorption of overheads. So that's first of all the big difference. Activity-based costing is based on the following assumptions. What are assumptions for activity-based costing? Just like as we have discussed assumptions under traditional absorption costing. Number one, in modern manufacturing environment, a large proportion of total cost are overhead cost, and direct labor costs are relatively very small. Yes, this is first assumption, that under modern manufacturing environment. You might be thinking, what is modern manufacturing environment? I would recommend you watch few YouTube videos and you will know about this. YouTube videos on modern manufacturing. Modern manufacturing. Just see how food processors like food factories, you can see automotive factories, you can see electronics factories, how modern day factories work today. You will be amazed the level of machines, the level of technology which is used. So the point is that the role of the labor is very small. Role of labor is very small, and that is accurate as well. Because overhead costs are large, it is appropriate to trace these costs as accurately as possible to the products that create the cost. Yes, it says that because the nature of overheads have changed. So it is very important to trace where those overheads are originating and which products are consuming those overheads. Okay, two things to identify what is the origin or what is the driver of these overheads and which products are consuming more of those overheads. And next, in traditional absorption costing, production overheads are allocated or apportioned to production departments and then absorbed on the basis of the volume of production work using a rate per direct labor or rate per machine hour. Yes, in traditional absorption, we calculate overheads or we charge overheads to departments, and from departments, we calculate overhead rates. But under ABC, overheads are charged to activities, not departments. So these are fundamental differences that we will discuss again in the next slides. When is ABC relevant? That is the point you need to learn about this. You need to learn about this. When is ABC relevant? ABC is a more expensive system to operate. Why it is expensive? Because it requires technology, software, and skills to operate it. So it's expensive than traditional costing. Traditional costing is simple. Even you can do the traditional costing in simple spreadsheet. But for ABC, you may need to buy a software. So it should only be introduced when it is appropriate to do so. Activity-based costing could provide much more meaningful information about product cost and profits. Much more meaningful. How meaningful? Because it offers more comprehensive analysis of overheads. It offers detailed analysis of overheads. Overheads. ABC offers detailed analysis of overheads. Okay, it like indirect costs are high relative to direct costs. So this is suitable when indirect costs are high. Indirect costs are major proportion as comparison to direct cost, where products or services are complex. What are complex products? If you look at all modern products are complicated and complex. Okay, modern car, for example. Do you know that today's cars are equipped with a lot of technology, sensors. So all those sensors generate data. So imagine how complex are they. Modern day electronics, look at your kitchen appliances. Okay, how complicated are they? So mobile phone, products or services are tailored to customer specification, yes. Another point is that there are more varieties, there are more options, there are more options and more specification-oriented products are designed. So this makes the production more complicated because previously, if you look back 40, 50 years back, products were simple, products were more standardized, but today products are not standardized. And this was the assumption we have discussed earlier, that products were standardized products, simple and standard products. And standardized products. But today, products are complex, customized products. Okay. Some products or services are sold in large numbers, but others are sold in small numbers. Yes. lot of companies that make different type of products, different variety of products. Some products might be sold in large numbers, but others sold in small numbers. For example, more expensive products might be sold in small numbers. In these situations, ABC will often result in significantly different products or services overhead cost comparison to traditional absorption. So under these situations, under these circumstances, it is more suitable to use activity-based costing than absorption costing. All right, now let's go into our notes where we can continue with this method. We can try to finish it. These are the volume 1 where you will have the you will be able to download it from the portal, where I will be covering section A and section B of the syllabus. So ABC, activity-based costing, cost structures of 21st century. I already have a little bit shared with you that modern day products are more complicated. You can read through all this. Read, self-reading. Background, you can go through why ABC was developed, what was the need. So all this you can go through. Research, insights, all this is just for to build your knowledge. Here is traditional absorption costing. I already have explained this one. Problems with absorption costing. I already have explained this. ABC. Now, when is ABC relevant? I have discussed already. Let's now move on to further discussions. ABC process or activity-based costing process. You need to learn about this. It should be on your fingertips. Step number 1 under ABC, you need to identify major activities in each department which create cost. Major activities. These are given in the question. These are provided. You don't need to identify. These are provided in the questions. Examples are, for example, production scheduling, you can be given. Machining, you can be given. Orders handling, quality and inspection. These are the different examples of activities which are normally given in the questions. So step number 1, identify major activities. Step number 2, determine what causes the cost of each activity. Means you have to identify drivers. You need to identify drivers of each activity. Cost drivers for each activity. And this is also given in the questions. It is provided in the questions. This is provided in the questions. Okay, so for example, the suitable drivers, there is an activity production scheduling, machining, orders handling, quality and inspection. What could be its cost drivers? Cost drivers are also called cost causers. Cost causers mean the factor which is driving the cost of an activity. I'm repeating, cost driver is a factor that is driving the cost of the activity. So for example, it can be production, number of batches set up for production scheduling. So if the activity name is production scheduling, its driver can be number of batch setups for production scheduling, because for every batch, production is scheduled. For every batch of production, a new schedule is a new batch is scheduled or a new schedule is designed. Okay, I can give you, for example, let's say a company that is making two type of pens, let's say two types of pen. So these are the two types of pens. Okay, now the company wants to make 1000 type of these pens and 1000 type of these pens. These are the two different type of pens. So because these are the different type, these are the different design. So every time the production need to be set up, production need to be scheduled. The machines, the equipment which is required to make these pens will every time be like designed in a way to make these products which are different from each other. Same example go for cars, for electronics, for furniture, for textile, for all these different type of products we talk about. This the same principle go. Okay, so I hope you have understood. So I hope you understand this point that every time the production new batch is set up, we need production scheduling. Okay, number 3. So the production scheduling, you can talk about machine hours for machining, number of orders handled for order handling, number of inspections for quality and inspection activity. For every activity, you need one driver. You need a driver, keep in mind. For every activity, there is a need for a driver. And this is given in the questions. Okay, I hope you understand this. Step number 3, create a cost center or a cost pool for each activity. That means you need to calculate the total cost of activity. This means total cost of each activity, step number 3. And this cost is also provided. This is also provided in the questions. Provided in the questions. Step number 1, you need to identify activities. Step 2, you need to identify the driver for each activity. Step 3, you need to calculate cost pool. Cost pool means the total cost for each activity. So this means, for example, if the activity is production scheduling, you need to calculate the total production scheduling cost. If the activity is machining, you need to calculate total machining cost, total ordering cost, total quality and inspection cost. And these are given in the questions. Got it? Step number 4. Here comes the calculate a driver rate for each activity. Driver rate for each activity. So driver rate is the same method we have used in the OAR. Okay, but this time driver rate. And driver rate formula is total cost of activity or total activity cost divided by total number of driver. Total number of driver. Keep in mind the total number of driver means you have to calculate the total number of the same driver for all products. For all products. This may need to be calculated. Total number of drivers, you may need to calculate it. To calculate this. An exam question may ask you. Exam question may also test this driver rate as well. Exam questions may test this. Okay, so step number 4, we calculate driver rate. Driver rate is equal to total cost of activity divided by number of drivers. Are you clear till step number 4? Are you clear? Are you understood? Is there any question? Very good. Thank you very much. Thank you. Perfect. Step number 4 is where we have to calculate activity driver rate. Here is now step number 5, where we have to absorb this activity rate into the cost of the products. Step number 5. Step number 5 is we calculate total overhead cost for each product using driver rate and the number of drivers used by each product. This would be little tricky for you because you have to now calculate the total overheads for each product. Total overheads, if there are 3 products, product A, product B, and product C. So you have to calculate overhead, for example, production scheduling, activity 1, activity 2, activity 3. You have to calculate overheads and then you sum up all these overheads, and then this is step number 5. Calculate total overheads for each product. Don't worry if you are not clear, because when we will solve a question, this will be automatically clear to you. Okay, no need to worry. But questions may test this step number 5. Step number 6, calculate overhead cost per unit. Once at step number 5, you have calculated total overhead for each product. Now it is very easy to calculate overhead cost per unit for each product. So this is the total overheads. Total overheads cost of the product in step number 5 divided by budgeted number of units of the same product. This is very simple and very easy. You can do it. And here is the step number 7, where you need to calculate product cost per unit. Product cost per unit. At step number 6, you have calculated overhead cost per unit. Here you are calculating product cost per unit. So product cost per unit means now you have to sum up direct cost plus overheads. Okay, direct cost plus overheads is equal to product cost. Got it? So my dear, this is a step-by-step method that I have put this table for you to make sure you understand in a structured way, in an easy way, you can understand all this. Let's quickly revise the ABC procedure. Step number 1, you need to identify activities. What are activities? These are given in questions. Step 2, identify cost driver for each activity. This is also given in the questions. Step 3, calculate that total cost pool. This is also given for each activity in the question. Cost pool means the total overhead cost of each activity is called cost pool. Step 4, calculate driver rate. You need to calculate driver rate for each activity. Driver rate formula is total activity cost divided by number of drivers. Step number 5, you need to calculate the total overhead cost for each product. Got it? This can be tested by exam questions. Step number 6, you need to calculate the overhead cost per unit. And step number 7, you need to calculate the product cost per unit. Remember this step-by-step process of activity-based costing, and this topic will be very easy for you. All this is part of our discussion. I have done this one. This illustrative example, now we will be keeping for our next class. In our next class, this example we will be covering comprehensively. Okay, because it may take around 20 to 25 minutes. This comprehensive example that will help you how to apply ABC completely. There is an Excel sheet as well that I will share it with you. Although solution is here, but I have prepared an Excel sheet for you that will also help you. Okay. And all this Excel sheet, you will be having all this. So my dear, after discussion of ABC process, let's talk about advantage and disadvantages of activity-based costing. What are advantages of activity-based costing? It is a more accurate, means because it calculates overheads more accurately than traditional absorption costing, and that is correct. That is correct. That because it calculates overheads in more details than traditional overheads method. Traditional overheads method uses only single rate to absorb overheads. But under ABC, we use multiple activity rates. Better cost understanding. What is this? Yes, ABC requires managers, ABC requires workers and management to dig deeper. ABC requires the management to have more in-depth understanding of cost and drivers of cost and activities and what is driving the overheads. So management, when management will have the better understanding about the drivers, they will be able to control the cost because they will have the better understanding. Where is this overhead emerging? Why is this overhead increasing? When they will find the reasons, when they will find the cause of overheads, they will be able to, they will be in a position to control those costs. Fairer allocation of cost, fairer allocation of cost, fairer allocation of cost. Yes, the drivers which are used in the activities are more suitable to the uh, like calculate overhead rates and activity rates, and this makes it more fair to charge overheads to those products which are consuming more overheads. Mean if a product is consuming less overheads will be absorbed. And if a product is consuming more overheads, more activities, more overheads will be absorbed. So that's why it is fairer allocation of cost or overheads to the products. Number 4, better cost control. How better cost control? Yes, that is simple. When management will have the better understanding, you need to link this one with number 2. Point number 4, link with number 2. When management will have the better understanding about the cost and how this cost is originating, how this cost is increasing or decreasing, what is the factor, what is the driver behind this cost increase or decrease, they will be better in position to control the cost, reduce the cost. Number 5, can be used in complex situations. What are complex situations? As mentioned, like modern day manufacturing, modern day services, these are complex environment. So this ABC method can be used for complex products. You would be amazed that ABC is widely used in the like aeroplane industry where planes are manufactured. Imagine it is used by Airbus, it is used by Caterpillar, it is used by John Deere, it is used by Boeing. All these are heavy, complex, big industries. Okay, Caterpillar, what it makes, John Deere, or Mitsubishi, Hitachi, all these companies use this ABC method because it offers better understanding about the cost, can be used in complex situations like Airbus, like Hitachi, Caterpillar, Mitsubishi, and a lot of other industries, can be applied beyond production. Yes, not only it can be used for production, but it can also be for other activities as well. Other activities, for example, it can be used for infrastructure management. It can be used for admin overheads, quality inspection. It can be used for customer service. Customer service or research and development, all these are non-production. Can be used in service industries as well. What are service industries? Like a hotel, like a resort, like for example, you can talk about a hospital. Okay, all these are a mechanic repair, for example. That's very interesting. Mechanic or repair shop, a clinic, let's say, they can use all this. Health clinic, these are all service industries, and they can use this ABC method. Okay, what are disadvantages? Not always relevant. Yes, there is a possibility that organization might be very small and most of their overheads might be simple overheads. Yeah, small companies, small overheads, their overheads might be very small proportion of the total cost. So it does not make sense to use ABC for that type of situation. Not always relevant. Number two, still need arbitrary cost allocation. Yes, it's possible that some activities may not have any particular driver, such as any cost related to machine or labor. So still we need to use labor hours or machine hours instead. Number three, need to choose appropriate drivers and activities. Yes, it might be difficult. It might be confusing. It might be challenging, difficult, or challenging to choose appropriate drivers and activities. And number four, complex and expensive to operate. Yes, it requires investment in hardware, software, investment in hardware and software. Okay, that's all about our very interesting topic of activity-based costing. And here are a few examples and questions that you will be able to try in after our next class. But if you would like to try, you can try. Okay, once you download these notes, you can try. It would be good. So next class, we will be doing this comprehensive example. First of all, we will be starting with this example, illustrated example of activity-based costing. I already have explained this topic, so I will directly go on this illustration. I will assume that you have got basic understanding of ABC. After this, like 30 minutes or 40 minutes, we will be moving on to our next topics. This will be target costing in our next class on next lecture 2. This will be covered lecture 2, target costing, very small topic. It will not take more than 30 to 40 minutes, all around 40 minutes. Then this is also lecture 2. So these are the topics, life cycle costing. It will also take around 30 to 40 minutes. And but we will have the practice questions as well. So yeah, next class will be based on these are the topics. All right, that is all from our introductory class. I hope you find this lecture 1 interesting, and I hope you have already understood my passion for this paper and my style that I have for teaching. I hope you have understood it very well as well. So that's all from today. Is there any question? Anything would you like to ask before I close the session? Is there anything?
No, sir. Thank you so much.
All right. So what do you think? How was this session? Were you able to understand some new interesting thing about performance management?
Yes, you relate it to the real world, so it's better to understand now.
Yes, of course. You will have the opportunity to learn a lot of real life examples as well. Latest examples, not outdated, latest, the business industries and economies, and we will link this one with the performance management. Okay, so thank you very much for your all thoughts. And Kamuhelu, hi Kamuhelu, it's okay?
Yes, sir.
Were you able to understand all the discussions?
Yes, sir. Understood.
Perfect, perfect. All right, guys, thank you very much for joining this class, and I look forward to see you on next Saturday with lecture 2. These notes and all the slides you will be able to download from the portal. Okay, thanks a lot. Have a wonderful evening. Bye.
Bye.